Hey there, this is Ryan Skaggs from the Mortgage Minute. I have got a recorded lunch and learn that we did in my office regarding the Sitzer-Burnett versus National Association of Realtors lawsuit. So you're going to find the first half of the 1 hour video is essentially talking about the lawsuit, details around it, when it started, getting some feedback from the crowd. We had roughly 25 agents in the office between myself and my colleague that you'll see on the video here shortly. So the back half of it is basically what we are suggesting if you're a real estate agent that you look at in the future, and that is in our playbook. So make sure and comment below playbook, and I will make sure and get you a copy of what we put together. So again, the back half is what we can look to improve on in the future to ensure that you're going to be successful as a real estate agent, know what kind of questions or objections are coming, know how to formulate the contract with the potential seller credit, things like that. But with that said, check out the video again. Come back around. It's an hour-long lunch and learn that was hosted here in the office. So let's get into it.
The key date to this wasn't that we obviously knew a verdict was going to be coming. Is that the key date that I looked at was MRED was changing their policy. If you guys all noticed, as of November 1st, as of today, you now can enter a 0 versus a positive value. Right, so that was a kind of policy change, so they don't get sued at some point, which who knows what'll happen there. But that was a policy change on their end that was going to happen November 1st. So I was like, oh, perfect date, middle of the week, we'll do it November 1st, right? So lo and behold, we knew this verdict or case was going on. How many have been following for longer than a year? We've already talked about this.
Yeah, I know you did.
Anyone else longer than a year? Like followed it, right? So yeah, a little bit. So. But just to go back, just to kind of give you the big picture, and this will actually kind of get into our summary. There is 2015 to 2020. That's kind of our class in Missouri. There's a couple others, California, other states as well. Correct me if I'm wrong, but my assumption is that Missouri seemed like the easiest win. Florida, interesting.
Florida.
Okay, so. Is that there's multiple states going on. Obviously what's hitting the news right now is this Missouri trial, right? So you're going to notice that National Association of Realtors is at least in the Missouri one, they call it a co-conspirator in all of this due to their policies and their I'll just stop there. I don't want to speak ill will, but
I'm sure you guys can speak ill will enough.
Yeah,
of
but yeah, they are in every single one of these. So so 2015 and 2020. Anybody know? And we were just talking about this, so a few people in the room already know. Anybody know how many people were actually in this class in Missouri? Go ahead if you.
It's like
you
Price is Right. Go over under.
It got up to 500,000. 500,000 sellers over, and they extended the period of time and they extended overall brokerages. But with that said, the actual class that is could get money from this verdict is less, right? So, but I'm still not sure if everybody that is in the bigger class was going to be able to tap into these funds or not. Well, who knows what happens 2 minutes after the verdict was released? Who knows what happens 2 minutes later? Oh, yeah, actually that'll probably go in today.
They filed against everyone else, right?
They filed against everybody else. So they filed against anybody that hadn't settled before. There's a few people that settled, like a Remax settled Anytime, which was CB's old parent company, right? They own all kinds of different
sister companies.
Yeah, sister companies and whatnot. One of them was out for $85 million, and then one got out for like $55 million, something around in there, and that was a couple weeks ago. So then what was left was National Association of Realtors, KW, and
Realogy, or no, that was that.
No, that's
No, it was just KW
at the very end. I think other people had settled. Yeah. So they were fighting tooth and nail all the way down to the end. So then Compass, EXP. I think a third and NAR all got Redfin.
They pulled out 2 weeks ago.
Yeah, all got kind of in there most recently, right? So, and we're going to obviously be seeing more and more in other states, and I think a majority of brokerages, I think everybody would probably agree, I probably don't need a show of hands, is making policy changes like in the last 90 days, maybe doing something in the future, or maybe giving new directives. Is that a fair?
Has everyone heard from your respective brokerages just about the topic and about talking points or et cetera?
Yeah, right.
Is that okay?
And
Still working on the talking point.
Okay.
yeah, this is going to be ongoing because again, like the talking points relate to what the actual change is going to be, and I don't think anybody really knows what the actual tangible change is going to be moving forward. I think that would be forthcoming, to be honest. So I can see a lot of different. I was just sharing one of my hypotheses is that we were talking about Redfin, I think, that already has a listing agreement that just does not talk about a buyer's agent. Like there is no mention of it. How do you get sued if you make no mention of it and you don't pay $1, right? So there's potential for some of those brokerages to be like drastically changing their listing agreements to their buyer representation agreements to their just the way that they do business. We were talking about Redfin. They drastically changed their whole compensation model a few weeks ago.
A couple weeks ago.
Yeah,
A week ago.
yeah. They said they were going to, and then I didn't know they actually did it. So that's what we got talking about. So
I wonder if that's just to minimize the, because I mean the lawsuit was like 2016 to whatever. So
yeah, 15, 20.
I would think they can go back in time for Redfin and do the whatever. So I wonder if they're doing this.
They stepped out of NAR completely.
Yep.
And then they changed their compensation model.
Yep. Yeah, they backed way out of NAR, and there's still a. So, and does anybody know what IDEX? Those terms. So it's basically, maybe you could put my words into it better because I'm not on your side. But basically, the ability to pull all the MLS listings and put it on your own website. Is that a fair representation, right?
Yeah.
So if you're not a NAR member, say Redfin for instance, are they going to be able to pull MLS listings anymore? Are they only going to have their own?
Sure.
Potentially.
No.
But do you think?
Zillow.
Yep. But I am on the fence of if there will be policy change enough where you have to be in one to be able to get the access to the other.
I thought that was the big stink about it, where if Redfin pulling out, they would be kind of choosing to omit a huge percentage of listings because then now they do not have MLS access.
It's not there yet, but
You can pull an API directly
to probably get it,
into
to get some of the
150
info.
different
Yeah.
systems.
Yep.
And
I would think Zillow then would prevent that because they'd be like, F you.
Yeah.
Or they go into partnership.
So that's kind of our true. That's kind of our umbrella summary, I guess, of how we got here. Obviously, over the last couple weeks, the trial's been going on, and obviously we all know verdict.
Did everybody hear about that? The dollar amounts and
Yeah.
what just happened yesterday?
Yep. So that's all very fresh. Obviously, appeals will be going on for years and years, right? So we're going to get into some of the talking points, but to just kind of cover the table of contents here of what's in the book, we're going to talk about just some best practices for your kind of showing procedures. And I don't mean to teach the class of you guys and your showing procedures, but there's a few things as it relates to the mortgage side and how you're writing up contracts that would kind of feed down to us, if that makes sense. And therefore, we're trying to give you the info to kind of stash away. So if you do come up against these listings, and again, it starts with the list agent, right? It's going to start with when that listing agreement is signed, and then it's going to filter downhill very fast, right? So when you do come up against them, we want to at least kind of give you some best practices, pieces of info to be able to be successful.
And then leading up to this, we reached out to real estate attorneys that we know and trust and work with here in Chicago, other agents, different. We try to spread out the brokerages because again, everyone has different messages. So that's where we kind of compiled a lot of this information. But obviously, again, you guys are out on the streets doing this and we are not. So then it's like the more opinions and different points of view and whatever we can all put together, that would obviously help everybody.
Kind of next topic, I put pivots or scripting. If you get the objection of, hold on, I've got to pay you, what do you say? Or, if you're sitting down with the seller. So we're going to talk a little bit about that. Then from number 8 down, basically from that kind of back half of the booklet, and I'll just kind of give you the big summary points, is that the back half of the booklet is, if your buyer presentation or your buyer representation document or how you first connected with a buyer was something along the lines of the seller pays for it, don't worry, right? I'm free to you. You know, those sorts of bullet points, well, that needs to probably change now, because you don't know when you're going to potentially fall into, you know, the topic of, hey, some of these houses, you know, don't have a, you know, buy side, right? And if you didn't talk about it up front, it's going to be way more difficult to then start going through. Like if I had a conversation with a buyer that wants to get a mortgage, and then all of a sudden, you know, once they get under contract, I was like, oh, did I not tell you it's $7,500 and you need to write the check now? You know, like that's going to be weird, right? So having that conversation, you know, and changing that kind of buyer value, I think is going to be a key part to having success in the future. And again, I'm trying to put myself in your guys' shoes. And to kind of summarize this point though, is that I believe that the buy-side agents are going to be treated a lot like lenders moving forward. And what I mean by that is that, you know, Michael is shopped on his good looks, his, you know, stature, his knowledge, his dad jokes, his presentation, and his rates and fees, right? We are shopped on our rates and fees just as we much are on our knowledge base, our experience, our whatever, right? I mean, we could lose something to, you know, back to your world, 0.5% one way or the other, or over $1 million, we only do 2% and they do 4%, and you know, blah, 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 right? I think on the buy side, that's going to be down the line, right? I'm not suggesting that's tomorrow, but I do think that having that value stack, what am I showing to my buyers? Not that I can just show them homes and I know this area really great. You've got to get a lot deeper, because I think there's going to be a lot of upending in how these contracts are written in the future.
Well, and then to, you know, kind of piggyback that, for anyone who's ever represented a buyer, if the buyer asks you, you know, what is your fee? What do you charge? What is your cost? What is the one response that everyone always says as a buyer's agent? What do you say? What's the response?
Seller pays.
Yeah, I'm free to you. You don't pay a penny. The seller picks it up, and then everyone I've spoken to, the buyer's like, cool, and then boom, you move on. Like there are no more questions after that.
If you can't find a house in the area, you know, like sometimes that'll, you know, come up, or you can't go see it on the weekend, and oh, you can't get to Rockford, you know, in 45 minutes from now, maybe I should find some, you know, there's always going to be some of that, but I think, you know, the value that you have to show up front for the potential to say, I mean, I know of an agent, he actually RSVP'd here today. He said, we are having buyers sign agreements at 3% if the seller doesn't pay. So if it's written at 2.5 and 2.5, we're charging 0.5. Now, 9 times out of 10, we'll probably just kind of waive that, but we're having them sign it and we're showing value up front because we know what's going to be coming in the future. Because then when it's 0, we could then potentially negotiate from 3 down to 2 and everybody walks away happy, maybe, you know, but whatever that is that, like, that's already happening in some places, you know, that they are outlining. I've also had the opinion that some people think bring it up front, you know, bring it up front, and some people think bring it up only if it absolutely has to be said, right? Up to you, right? I'm very transparent. I would much rather say it up front, get it out of the way, make sure everybody understands, and push forward. But completely up to you, but at one point or the other, I think the conversation's going to be had. So,
does anyone currently have any, you know, when you have a buyer, do you have them sign an exclusive agreement with you? I know some people do. Some people, they're like, oh, I haven't done it ever. You know, is it like show of hands? Who does that currently, where you sign that buyer agreement? Same company.
Quarter.
Okay, so a couple
quarter.
people.
Yeah. Maybe.
For the people that do not, is that a personal choice? Is that your managing broker, he or she, kind of saying don't? Is that, you know, you used to and now you don't?
You never needed it. You didn't really necessarily need to. I would say the number of times, and correct me if I'm wrong, because I'm not in your shoes every day, that a buyer kind of backdoored you is pretty slim. Very, very few times would a, you know, buyer backdoor you into something else so that you don't get paid to commit or go see the house.
Isn't there like a procurement, what's the term for realtors where it's like if you showed and, you know, you can kind of prove and whatever it is that you showed someone a place, they snaked you out and then bought it, that you can then kind of come back in and claim some of that?
Yeah.
I forget the name of that. Is that right?
Yeah, you can claim all of it.
I mean, you're
Procuring costs.
Procuring cost, yeah,
There it is.
procuring costs,
Yeah.
yeah, there you go, so.
But go ahead. So let's get into the procedure here. So this is actually in the book. So
Yeah, so,
and I would encourage you guys, if I grab some pens, if you don't have them,
oh, there's no stacks like that.
throw some notes as you guys are get going, because I think we try to give you more of the big bullet points of what our thoughts were. But this is going to be very specific to you as well, right? So, and we don't use all the same lingo that you guys do. So, let's be honest. So,
Yeah. So obviously today being November 1st, this is when the change is happening on the contracts, where you can now put 0 instead of some positive number, whatever that is. When and I believe also you used to be able to filter by broker compensation, and now you cannot. Is that correct?
I believe that's correct.
Been like that for a while.
Yeah,
Okay.
the filter piece, like they got that. I think everybody is taking that out now. So, because they know what'll happen if they.
That a while back.
Yeah.
Was it okay?
Yeah.
Because I mean, typically you would see, it'll say buyer compensation, 2.5% minus listing fee or brokerage fee, or you get whatever all that looks like. So we want to make sure everyone knows, on the contract where all that is. If you are writing contracts still and you notice, or you probably don't notice, if there's a 0 from the sell side and you're going through and you're not realizing that you ain't getting paid, you're gonna have a bad experience at the very end when you're looking for a check and it's not there. So definitely. I've had some attorneys mention that they might try to rearrange on the Illinois, what is it, the 7.2 or whatever the newest contract.
The 7.0.
Yeah, whatever.
That's
Yeah, to try to kind of make it stick out more, the broker compensation for the buyer, so that someone doesn't kind of just be flipping through sign and they don't realize it. So obviously that is a part of it. With the 2.5% to 3% and so on, when you're looking, and I was going to ask you about this too. Is it something where I know other states you can go up to 6, but here I feel like it's 5.
You can go up to anything, can't you? You guys go up to anything you want. It's just more par for the course.
Okay,
Yeah.
so regional, we all agree that 5% is pretty, because I know other states, I hear 6 all the time.
I think it's like 50-50. What do you guys think?
Yeah,
50-50?
Yeah.
5 to 6, right? I mean, I know definitely there's markets that are like 95% 6, and I know there's definitely markets that are like 95% 5. But I feel like ours is pretty divided in my mind. But either way, of verifying, and figuring out a procedure to know if you're going to show a property, right?
Yeah,
that's
one. Part of it. Yeah, a lot of this is kind of like a flow chart, like if this then that, right? So it's like if the property that would check all the boxes for your buyer is only offering 1%, if that, then what are you going to do? Are you going to bring it up to the buyer at that point in time? Hey, you need to make up the delta to 1.5. They might say why. You need to be prepared to kind of support your cause for why they're doing that. So again, just being mindful of the contracts, be mindful of listings, what they're offering, and so on. So you're prepared to kind of come back at them with some good information. As far as
solar credits.
oh yeah. So is everyone familiar with getting seller credits to pay for closing costs and all that? Okay. Does anyone know what the limits are, or that there are limits, or what a seller credit can be applied to? Okay. And yeah, this is
Next page.
Yeah, this is an extremely common kind of misunderstanding. So very often I'll hear from a buyer, oh Michael, Eric showed me this great property, we're gonna get it, and they're gonna give me a $40,000 seller credit to whatever it is. Like I can't wait. And I'm sitting there in the back of my head, I'm like, you ain't getting $40,000. That it's physically impossible, and not because we're trying to hold the money, and not because we're on the seller side. It's because seller credits can only go to 2 categories out of all the monies that are happening with the transaction. So closing costs, again, title company, if they're paying points.
Buyer compensation would be a closing cost.
Yeah.
Right. If they're paying their buyer's agent, that would be a closing cost.
Right, which we can kind of help build into it.
Yep.
So regular bona fide closing costs, but then also there's a category called prepaid items. Does anyone know what prepaid items are? Usually it's all.
This is our vocab.
Yeah. So yeah. So. It could be like throwing money into the kitty for new construction condos. That would be a category. So typically prepaid items, it's putting money into your escrow account, right? Putting money for property taxes and homeowners insurance into a little kitty to then pay your taxes in the future. You're prepaying it. Your homeowners insurance, if you have State Farm or Allstate, you have to pay for a year in advance at closing. So if your policy is $1,200 or whatever, that's a prepaid item. daily interest, if anyone knows what daily interest is. So if you close on the 20th of a month, then you got to pay 10 to 11 days of interest for the rest of that month, right? You're prepaying those days. So there are a few other categories that we can kind of allocate seller credits towards, but whenever you hear these big numbers of it, unless there really are that amount of closing costs, which rarely there are, or prepaid items, that money just stays with the seller. And the seller side knows that too. So we have a few tricks that we can kind of share to capture that money back on the buyer side.
Yeah, so the bullet points there is that we would have to pay down their loan, like give them a little bit more of a down payment, or bring down their loan amount a little bit, which just isn't ideal because they're not getting the money.
Yeah, that's
maybe they buy a point so we can like increase their cost, but yet they get a slightly lower rate. I hate that idea when rates are so high, and we think rates are going to be lower in the next 2 to 3 years. Just to use that credit to to almost offset these costs that could potentially be higher. So you're questioning? I don't like it.
I'm listening.
No, please. This is meant to be collaborative and or like have two sides to the conversation. So, yeah.
I just don't see where you're going to get the data that rates are going to come down in the next 2 to 3 years.
Oh, I got you. That's I would go 2+. If you're at 5, I think we could sit and have a beer and talk about where we'd be looking at. But yeah, long story short is my point would be is you almost have to like artificially inflate costs just to be able to use that credit, when likely they need that credit to then offset something different, right? Because they have work to do, they have something else, right? So it's just not ideal. But that would be where you really have to connect with the lender to know what those closing costs are going to be, right? Now, if it's a buyer's agent commission, right? Now all of a sudden, if you're going to ask for a credit, and I've got a little picture of the contract there, credit at closing, and you wrote 2% of purchase price, right? And you're charging 2% of purchase price, well, it just offsets each other, right? So you're not really getting a credit for closing costs. Everything is normal. You would get paid. Everybody's happy. Does that make sense to everybody? Kind of that procedure.
So there's a limit to what can be defined in there, but is there a monetary amount?
There is. Next page. Yep, next page. Well, actually, that's notes, and then the next page, I've got a breakdown. This is Fannie Mae and Freddie Mac. This is their current, and they call it IPC, Interested Party Contribution. So in our mortgage world, that's one of our vocab words again, IPC limits. Principal residence, if I have less than 10% down, my maximum credit is 3%. If I'm putting 20% down, 10 all the way to 25, now I can get a 6% credit. If I'm putting 25% down or more, now I can get a 9% credit.
Yeah, but the catch, the little asterisk is that there has to be closing costs and prepaid items that add up to that number. So it's the lower of the two, right? So if you're getting a $700,000 house, right, and then you look and it's like, okay, 3% in that scenario, that's 21 grand. If there are not $21,000 of those two categories, then you ain't getting it, right? If there's 14, then the 14 can be applied, but then now we have this delta of 7,000 that
you have to
you
figure out a way to
negotiated,
use.
and your buyer has earned it through whatever it is. So how do we keep that on their side of the ledger? And again, there's numerous ways that we can kind of reallocate dough, where it's all above board, it's all on the closing disclosure, the master statement, so it's not like funny business. But yeah, there has to be that amount of closing costs for those percentages to kind of kick in, if that makes sense.
And I do want you to highlight investment property. Maximum 2%. Maximum. So if you get into a scenario where you're showing an investor a property, maximum 2% that you could be, I don't want to say manipulating, like that's a negative word, but you are modifying the contract to be able to make sure, hey, yeah, I'm happy. If I'm an investor, I want to buy 4 properties, I'm happy to, pay your fee. Well, the maximum that you could be getting as a seller credit, having the kind of seller, kick that back over is 2. So that is one of those that rarely ever do you see, seller credits for investment property transactions. Typically, I would see all cash. If they're financing it, it's like, hey, I'm an investor. I don't really need inspection credits, but I want a good price. I want to make sure I've got my, I'm in at a good number, right? So that is significant if you're working as a buyer's agent to an investor in the future to understand what that might look like. So questions on that, guys?
I have a question. So
Yeah.
these 2-3%, are they like the closing costs and prepaid?
Yes,
together?
they add up together. So, and again, buyer's agent commission is the bucket of closing costs, right? So that would count into closing costs. But if you know, the story that I tell a lot of people is like, hey, I've got a $300,000 townhouse and I parked a $300,000 Ferrari in the garage, and I said, the first person to buy this house gets the Ferrari. Like, you know, that's not a $300,000 townhouse. It's technically zero, right? Because you got a car. Like, so there's a maximum credit or incentives or things in new construction in 07. You saw some really, really big credits that were allowable back then. You could give a $50,000 credit and sell it for.
Because they didn't want to lower their price.
Yeah, they didn't want to lower their
New
price.
construction, yeah.
Right? You bought it for $500 with a $50,000 credit, meaning you really only paid $450, and then you could sell it 6 months later for $550, you know, with no credit, and make your kind of $100K delta, and then that's why you saw those properties flip over and over inside of a really short period of time, and likely the first few people were kind of quote unquote in on it, and the last few people, you know,
Left
were
carrying
holding
the
back.
bag. Yeah.
Yep. So.
Okay, Ryan, quick question. So I deal with a lot of lower end, like first time home buyers that are only 3 to 5%. So when someone goes, hey, you know, I say, get your pre-approval letter, shop, get your pre-approval letter. So you're gonna be giving them two numbers, like, hey, if you have a cooperating seller that's paying the commission to your buyer's realtor, you're approved for X. But if your, you know, the seller doesn't cooperate with your buyer, we're gonna automatically factor in 3%. So are you gonna give them 2 pre-approval letters, and isn't there gonna, I mean, this has nothing to do with you guys.
It's going to change our world. It
Exactly.
absolutely will change our world, because, and I think it's going to affect that market the most. It's going to affect that market from the day that they
They're
list it.
tight.
If they're a $250,000 townhouse, you know, do they have an extra $7,500 that maybe they don't have to if they're watching the news? I don't know, right? Now, I think there's value in that. Absolutely. We're kind of, you know, playing for the same team here. But with that said, like, then they go to be the buyer, and maybe they can't even buy. You know, maybe they just don't have enough. That is absolutely so. What I see is that I'm going through my normal process. These are the closing costs. Now, asterisk, buyer, Pam, you know, you're gonna want to talk with your agent because of compensation to the agents. Have you already had that conversation? No, I have not. Okay, great. You're gonna want to definitely connect. In case that you see a property that the seller's not paying for the commission, there could be additional fees around it. Now, I'm not going to get into it because I don't have any numbers yet, right? Because I don't want to go scare them out of it yet, but I also need to be transparent enough to share that you could be needing to kick in more, right? So when I issue a pre-approval letter, I'm putting on there of like what their purchase price would be, what their expectation of cash to close with a maximum is. And that's where that kind of line item would come in. It's like, they cannot go over 10K of, you know, cash to close, right? Like,
So that would include their down payment and the closing costs, and also potentially the buyers.
there's plenty of transactions that go on where we're getting like down payment assistance from the state of Illinois. We're getting a seller credit to offset some of the closing costs, and they're coming in with their 5K, you know, or less, because they only have 9, right? You could do the deal and it's workable, but if they have to be on the hook for more fee structure from, they might not be able to do it. It might not be a doable transaction. That is absolutely a real scenario, potentially, you know, sooner than later, unfortunately, right? So, and that's where it's going to be more important than ever to probably connect when you're going to go show a property for maybe it's kind of that I don't want to say lower end borrow, but that lower end price point, right? That price point, or you know they're a little cash strapped, is we need to be putting the numbers together for you to make sure that, like, hey, if you want to go see this, it's going to cost $14,000 cash to close. Do you have that? Do you still want to go see it? Yes or no? Because I could see some times where you see something, but you didn't realize it's going to be more. You told me it was only going to be less than 10, and then, you know, like, there's definitely going to be some changes going on in our world too of how that applies, for sure.
Well, so, and there's always just unintended consequences. So realtors I've spoken to leading up to this, they're like, man, you know, I probably just won't take on as many of those buyers. Again, they're already strapped for cash. They're not just, you know, swimming in dough. They're doing 3.5% FHA, 5%, whatever it is. So then again, there's going to be all of these kind of oh, here we're trying to do this, but then it's going to be affecting other things. So that's
I guarantee you, if I've had 3 to 5 buyers this year that needed the seller credit for the transaction to work, right? So those people cannot, for whatever reason, afford in that case to be able to have that seller credit to offset a buy side compensation, right? You know, a buy agent compensation.
Cover
So
closing costs.
yeah, correct. Because they needed it
Right.
on the closing cost piece. And there's not enough, because they only can have a maximum of 3.
Yeah.
So there's not enough left over or to divide it up
Like
technically
down payment,
to be
closing
able
costs,
to do
commission,
that,
broker
right?
commission.
So I could potentially see, I know this doesn't involve you
Yeah.
guys, but potentially that's almost discrimination against like the lower economic.
Oh, I think they're gonna get screwed.
And they're gonna
I think
file
they're
their own
gonna-
class lock.
I think
Action
they're gonna.
lawsuit against,
I mean,
like,
I do not see this helping.
lower
like,
people that are just minimum
A
wage.
seller becomes a buyer, likely, and like, how does this, you know, how is this going to help them outside of, you know, the attorney's office that's going to make hundreds of millions of dollars? But
Well, and then one thought is that, you know, if you're historically, if you're selling a house for $500,000, then 5% commission, right, 25K in that example, is, you know, goes to the agents. So then the thought is, okay, well, the place is then really worth $475 because baked into it is 5% that is just kind of fees, commissions, and so on. So then it's like, oh well, with this new law and all that, sellers, now that same thing, they're gonna lower their price down to $485 because they're not paying it. It's like they ain't lowering their price. They're not lowering their price.
Yep.
So there's gonna be just naturally this divide of, you know, if you're talking to a buyer where it's like, oh, you know, because they don't have my commission built in, maybe we can get you a better price and so on. On the seller side, they're not doing that. They're not going to lower the price down to you know, account for that. So it's still going to stay at that 500, or maybe get stacked up to like 512, right, with a $12,000 credit back. But again, it's going to unfortunately kind of impact the wrong people in different ways. So we'll see.
But then I could see that buyer also going, okay, Ryan's gonna charge me 3, Mike's gonna charge me 2, and Pam's gonna charge me 1.
Right.
Which realtor am I gonna use?
that's where I said that you're going to be, you know, potentially treated, you know, more like a lender. It's a joke, not a joke, but like Ryan's 7.75 today, and Mike's 7.875 today, and Eric's 8% today. Like, who am I going to go with? Well, now I got to look at, you know, what other value is coming to it, or, you know, am I going to be able to see more properties, or they going to be able to negotiate a better deal for me? That's why this like kind of back half here, which I know we were going to spend a majority of the front half, but this back half is so important because you're going to have to really be able to kind of pivot back to that original kind of value add that you're showing buyers up front, or they're not going to be your buyer anymore.
Yeah, I mean,
right?
we've been getting haggled since the beginning, you know,
Yep.
on fees and price and point, and I mean, we have people, they push, you know, their mother over for $1, you know, so it's like that. But then if you know, if it's now getting turned over to the buyer's agent, where they're having to kind of explain and justify, you know, how much money, you know, the 2.5% that comes to them, and then it's like, how many times, I know this happens to everybody, you've been asked by buyers or clients to have, you know, drop your pants a little, right? Like, hey, can you trim the fees, or can you reduce your commission? And I'm sure I can tell by the nodding heads that it's frustrating, and you know, you're telling them, hey, listen, you know, I'm not going to discount my services, here's all the things I'm doing, yada yada, and so on. But there's always going to be someone else that's like, I'll do it for $10 less, or I'll do it for half, you know, like there's going to be people that just race to the bottom. And yeah, so we, again, trying to figure out how to avoid that.
I think what kind of leave it on that is that you're all probably used to doing that a little bit on the list side, but I very much doubt you're used to doing that on the buy side, because just every single person in this room as a buyer's agent has been under a new procedure. You know, we're all new to this, right? You know, does that make sense? Where I'm trying to go with it is because, and we don't even know where the changes are going yet, right? So it's going to be fluid. So this next slide Mike's gonna cover, but this is only for your math-driven clerical individuals, right? I wanted to put this in there. Please don't get your calculators out, but 10 to 20% of the population is going to love the math here on this screen, or if you just have some basic bullet points to be able to kind of come back to, we wanted to at least put this in there for you.
Yeah.
So.
Have the agent guy do the math. All right, so yes, math is one of my strong suits here. So we have this software that we, you know, it's like a third party that we pay for to be able to kind of show our buyers different breakdowns on payments, different properties, right? They very often will ask us, hey Michael, I'm going out with Eric this weekend, I'm gonna see, you know, property A, B, and C, what do they look like for payments, right? So then we put this together where it's very easy to digest, it's very kind of charts and pictures and colors and all that, where it'll say, okay, property A, you know, 5% down, taxes, insurance, boom, it costs this. Property B, here's what it is. Property C, so that the buyer knows before they even, you know, leave their house to go see these places, what it's gonna cost out the door monthly, right? They wanna know, you know, what do all buyers care about? They care about the monthly payment and how much cash they gotta bring, right? Those are usually the two most common things we get asked. So with this software, and we were talking about, okay, how are we gonna show that if the broker's commission is not built into this, and if you can maybe get a little bit lower price and you pay it out of pocket, what does that mean long term, right? Like after you get the loan. So again, not to make it too complicated here, but the first kind of column right here, where it talks about a $500,000 price, and then you're getting the seller credit, right, to kind of help offset the buyer's commission. And then, you know, then it goes into, you know, again, these rates are obviously estimates, goes into the payment, cash to close. And then the second one is saying, okay, that same house, they're not offering a buyer's compensation, so that you, the buyer, you need to come up with 15 grand. Right, so again, as things evolve, if we're showing the buyer, hey, if you are gonna not finance it and get that 15,000 off of the price, you know, hopefully, then here's what the payments would look like, here's and so on, and then obviously over time, that option kind of becomes a little more attractive. In the very beginning, it's more cash, but again, as you go, you notice that the payment differences and so on and so forth. Eventually, there's a break-even point, right, where the money that you paid up front gets kind of recouped via the lower monthly payments, the lower loan amount. And then after that, it's kind of, okay, now we made the right choice, right? Now we are saving money in the long run. So we always do that math on a break-even point of like, hey, how long are you gonna be in this home? How, you know, everyone's like, oh, 10 years plus. In the back of our heads, we're like, you ain't gonna do it 10 years. Like it's just, they're not going to be. But again, we're trying to just show different options to the buyer where it's like, all right, hey, listen, this is happening. If they are not offering a buyer's compensation, and you want that house, then here are your options, right? There's not a million options. It's either you pay for it or we kind of build it into the financing. But other than that, again, if the seller's not paying for it, there's only kind of two sides to the equation.
Does that scenario make sense, the columns there? You know, I could absolutely see a engineer type, CPA type, like, hold on, I'm gonna pay $500,000 and then get a credit for well, why wouldn't I just pay $485? I could just pay you out of pocket. You absolutely could. That's column 2, right? And if you look at column 2, their payment's $100 less, right? So fair point, right? With that said, and you see the bullet point, the break-even point is 104 months. And how I'm calculating that is that if you took the 15K and threw it in your online savings account, you know, earning 4 or 5%, whatever it is these days. I'm getting 4.25, I think. Yeah. Yeah. Oh no, online savings, not bank savings, but online. Okay. But either way, let's say you're getting 4% in something conservative, right? That money over that period of time is going to earn a little bit of money, right? So where's that break even if you just would have saved it and paid something higher? And again, I think the point that we're trying to make is that break-even point's pretty far down the line. It's not right. Like it is pretty far down the line, analytical buyer, that you would actually be starting to recoup that cost. It's likely a better transaction for you, unless you're maybe an investor that's gonna keep it for 20 years and you've got bigger plans with it or whatever. So does that make sense? Again, the math is very general, but it is meant for that kind of analytical type. So. And then, Mike, I think
and the next one,
I kind of stole your breath.
No. I mean, but yeah, the next one again is whenever I talk to buyers and they're like, hey, should I pay extra for this? Should I do that? And so on. I'm like, well, what's the alternative? If you're not going to put the money here, then what are you going to do with it? Are you going to go to Vegas and blow it? Are you going to gamble it away? Are you going to put it towards good purposes and so on? So the next page of that chart just shows that if it were invested somehow, again, it's something conservative. We're not talking about Bitcoin or Dogecoin or whatever these weird things are. But if it's put somewhere else, then as time goes on, eventually, again, that one becomes an attractive offering. But when people talk about how long they're going to be in the property, how long they're going to own it, how long they're going to be in that loan, it's just typically does not make sense when it is years and years out just to break even. So again, we're not trying to steer people or whatever, but it's, you know, when you look at the chart, it's usually pretty straightforward of which one you think would be the best option. It's like just build it into the financing. It's dollars of a difference. It's less cash out of your pocket. The payment difference, who cares? And then move on versus, you know, the other options. So
Cool. We're gonna move on here to I call pivots, but this is just, you know, objections. So I'm gonna put somebody on the spot if nobody volunteers. But if I'm a seller, who we put on the spot?
Daniel.
Oh, okay. If I'm a seller and be like, I saw in the news that I don't have to pay the buyer, you know, what are you saying? What are you saying? You know, anybody want to, you know, give me the bullet points? It doesn't have to be eloquent. It doesn't have to be polished yet. But
Good luck with that.
yeah.
What do you mean good luck with that? If it's out there in the world, then everyone else knows it. So if other sellers are going to do it, why don't I? I want to save that money.
Would you? What are you good at?
I'm good at, let's say I'm good at selling widgets.
All right,
Yeah.
you're good at selling widgets. Would you sell widgets for free?
I would not.
Then why would you expect me to sell my services for free?
But
They're not
you're going to
used,
sell the
right?
property. Yeah,
Yeah.
no,
Yeah.
yeah.
We're gonna go out. We're gonna do this stuff. We're gonna go have a grand time together. We may even get coffee. We're gonna become best friends for the next 3 to 4 weeks. You expect me to do that for free? No.
Well, this is on the buy side. What if you're
Right,
sitting with
yeah.
a seller? What if you're sitting on the seller who's writing the contract and says, I'm going to enter 0
That's fine.
for the buyer?
That's fine.
Do you have any objection?
No.
Yeah?
You
Anybody?
can put $1 in
Mine-
my
Yeah?
I mean, my first thing to them would be, well, if I get a call from a buyer, who's paying me?
Yeah. I think that's a real, I think that's one of the pivots that if I was sitting in your shoes, I would have is like, absolutely we can write it up that way. I do want to run through some of the pros and cons of what might happen, but I do want to ask you a question. What if, you know, the buyer finds the property and calls me and I need to write up the contract, you know, and then work, you know, through the process, you know, with said buyer, who's paying me, you know? Now, maybe that seller is going to look at it and be like, well, I'm paying you to go find a buyer, right? So I think these are all fair questions that are going to be coming up in the future, which, you know, I don't think anybody has, everyone's going to be able to answer that question a different way. Everyone's going to have a different process. Everyone's going to have a different opinion on how to, you know, kind of cover that objection or answer. Some would say, absolutely, we'll write it up at 0. Let's move on, you know, and you move on from there. Others would stop and say, hey, I want to make sure we have the largest buyer pool possible, and therefore I want to make sure every agent wants to bring people here, and therefore we need to incentivize them by doing so. Therefore we're blah, 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 you know, to each their own. Tom, did you want to add to?
Yeah, you pretty much covered.
Did I steal your thunder? That's sorry,
Which
bud.
is okay.
Yep. So, and I don't think anybody up here or anybody out there is going to say that there's a right and wrong. It's going to likely, I guess our point would be, is that this is absolutely something I would take some time to have some deep thought on of how you're going to, because I think that's going to be coming up very soon. Yeah, go ahead.
And you know, when you were talking about incentivizing the buyer, and I think that's where we have to be careful, right? Where we're saying that if you don't include the buyer co-op in there, then the buyer's agents, you know, might not get as many showings potentially.
Yeah.
And then it
That could put
doesn't
you
us
put
in
that
the-
in writing in an
I'm just
email.
saying
That'll be in 5 years from
but
now.
I think a lot of people, you know, it's really
Yes.
how are you going
Yes.
to
Yes.
position
100%
it,
correct.
because you don't want to put yourself in
Yeah.
It just gives,
Yeah.
if the seller can pay the co-op, it will incentivize the buyer to want to buy the place. Otherwise, they may not be able to afford to buy the place because they can't
Yep.
pay commission.
Yep.
And tell them there's contracts in place on the buy side that these people are gonna owe the money no matter what.
Yeah.
So it's just inherently gonna be more expensive for them to buy your house versus someone else's.
And the problem is them just getting up enough money for down payment.
I don't care if it's a $900,000 place. You say, hey, if they're looking at a $900,000 price point, and your property that I'm gonna sell for you ends up being $27,000 more in cost, approximately 3% that a buyer's agent's gonna charge them, do you think, you know, you're gonna be able to contend with these? You know, I don't know, right? However you pivot in that, but I think these are all kind of conversations we have to have with ourselves, with our colleagues, with others on how you're going to kind of best practices doing that.
Yeah, just have some rebuttals prepared because, you know, again, just leading up to this, you know, some agents, it's like, oh, well, this is going to make buyers just snake around the buyer's agent and then just go right to the seller. And it's like, okay, then they contact the seller's agent, they want to make an offer, they're unrepresented. Now you're having to do more work, right? So again, everything kind of leads to another thing where it's like, okay, if this is happening down this route, we feel it would be good to just have a few things to say about that. If they want to go this route, a few things to say, again, just so you're the source of information and it's not just kind of like like deer in headlights.
Do you think any other kind of rebuttals that you think are going to be very consistent moving forward? Anybody?
I think you just have to show them what their options are, right? So you could say historically at this price point, we would be getting buyers that have probably 20% down saved. If we don't offer the co-op, they're going to need at 23% saved, right? That's going to limit our buyer pool by a significant amount, especially for folks that they've been saving for a long time to buy this house. We can cut them right out of it if you want, but
I'll just I'm the seller. Well, I'll just lower the price then. Instead of 900, what I'll do 890. I'll do 885 to kind of minimize that. Let's how about that?
Because the ratios are persistent. They're going to move with the price, so it's not going to matter. It's not going to make it.
20% is still 20% of whatever.
But our buyers are searching by the price. So if I lower, won't that kind of drum up a little more activity to get them in?
It certainly could. But if you're telling me you want to lower the price right now, let's go. Right?
Yeah.
At the same time, we'll start to get some stats of how many buyers agents have agreements in place. As of right now, it's 0, right?
Yeah.
Maybe 1%. So you're telling me that we're going to limit the buyer's agents to the 1% that have a buyer's agency compensation agreement with their buyers. That's going to be tricky.
Yeah.
Right?
Yep. And I think the concept of limiting the buyer pool, it's not necessarily incentivizing maybe, Lydia, to your point as well. But I think you got to be very cautious, careful, specific with the words that are being used, right? I think now more than ever, the words are going to matter so much more because they're coming in with a few links and headlines, right? And
the internet knows everything. So.
they're going to come in with maybe a preconceived notion of whatever they read versus maybe what the reality is, right? So I think, there's only so much you can do to be prepared for that. But with that said, I think that will be a reality here if they're coming in with maybe questions or an expectation that's correct or incorrect, moving forward. So, all right, we're kind of pivoting to the back half here. This is going to be obviously quicker because we're running out of time here. But this is more meant for, and when I say self-assessment, I kind of mean these are the things that I would be focused on over the next maybe year and I'll just say kind of checking the boxes one by one.
Yeah, when we polled, again, a lot of the realtors are people that we're trying to gather this information from. It kind of led to, what can you do on your end, right? Because again, a lot of this, goes back to the agent. What can you do on your end to show more value to your buyers, to be farming them over time, to keep your hooks in them so they don't stray, et cetera, et cetera. And if they do bring up some of these questions, they get, how are you going to kind of separate yourself from others? So this is kind of what came up with.
We've got the camera icon. I'd encourage you, as you check a few of these off, text us, right? Individually, if you've got 6 out of 10 already done and you've got 4 left, again, selfishly, as I kind of said up front, you getting 10 out of 10 is going to help the real estate market. It'll help you. It'll help us. It'll help our individual markets. So it is collectively going to push us in a positive direction. But just to kind of go briefly as fast as I can over these, and then kind of individualize very quickly as well. Your value stack, and this is buyer. You all probably have memorized and could give me your 3 bullet points when you go to a seller right now. That is your listing presentation, right? You could summarize your elevator pitch listing presentation very, very quickly for me. How many would feel super comfortable on the buy side to immediately be able to do the same? My guess is not as many. Because it's not important right now, right? It's not an important aspect of business in my mind in your guys' world, but I would contend that it will be, right? And again, I don't necessarily think the next 60 days you're gonna have to
No, but it may behoove us to start.
Yes.
Start a little bit
This
at
is
a time.
this second half is meant for, in my mind, the next 3 months, 6 months, 9 months, year, right? This next half, right? The bulk of it in 55 minutes we just covered, right? The lawsuits, some things, some best practices, some understanding on the mortgage side of things. But this back half is, I think could be really important. If you have to go leverage your value back to this buyer to get paid, say in a year's time, what are you pointing back to, right? So let's run through. So value stack, and I just kind of gave you, what's your 3 bullet points, but it probably needs to be kind of eloquent in a sales process when you're going through your buyer agreement, in terms of why they're working with you, right? So reviews. How many people feel that they are 10 out of 10 of they have their reviews somewhere very accessible and or maybe reference them? Yeah? Okay, others? Yep. I know you do, so.
Zillow reviews, Google business reviews. I'm just curious.
Yes, and yes. Okay.
Okay.
You got them all? Yeah, because I also think anyone that's maybe had some like Zillow or Redfin, there could be a lot of change to those websites in the next year, and you very well might not be wanting to have some people with info over there, right? Moving forward. So I am a big, I have a big push for GMB, for Google My Business, right? Because for SEO purposes, ease of use, the fact that whether they're part of NAR or not is not going to matter. You know what I mean? That sort of stuff, right? Headshot, social branding. I think, there's going to be, in my mind, in the next 5 years, is really more branded buyers agents that are potentially going to be coming up, as of a normal quote unquote agent. They're going to be branded more as a buyer's agent in the future, and you're going to pay my fee, and here's why, right? And they're going to work with 90% buyers, as there's a lot of people, their 90% list. I think there's going to be, the cream will rise to the crop that really kind of take that, under their wing and say, I'm going to create a buyer presentation to be able to do this, and I'm going to charge them for it too, right? So.
And then a lot of this here is mainly, everyone knows a realtor. Everyone went to school with a realtor. Everyone has a neighbor that's so realtors are somewhat abundant, as people would say, right, in their sphere and their work, whatever it might be. So then it's like with these changes, very often it's like, oh, my brother-in-law, my sister-in-law, oh, and then again, it's the buyer's agent. You're not really paying for them. You know them, so then you kind of use. But then if you are now all of a sudden having to pay $15,000 for this person, $12,000 for this person, there's going to be a little more vetting. There's going to be a little more, hey, Jane Doe, I appreciate that. Let me get back to you. And then it's going to be looking at people online, checking out the reviews, again, just experience, neighborhoods, just all those things. Because before, when the cost was, when you're not picking up the bill, it didn't matter as much. But now it's like, okay, this could be 10,000. This could be a lot of money. I need to make sure who I'm working with.
I think I get searched 50 to 75% of the time.
Oh, that's your wife, though. That's what she's
Yeah. But because I will get conversations like, oh, hey, Dave, told to call me, blah, 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 blah. It's like, oh, yeah, I saw your post on Instagram. Like, they had already looked me up prior to ever talking to me. Like, and I think that is going to be even more into your buy side world than it's ever been before, right? Maybe on the list side, they would look at some marketing that you've done or something else, right? But on the buy side, it's like, are you relevant in the given market that you're going to ask me to pay a fee to show? You know what I mean? Like, there will be a little bit more of that social validation, I think, that'll go on, right? Yeah. So, and that's why I think like the headshots, the imagery, and some of that stuff is important. Kind of moving quickly, just so we can wrap up, the buyer follow-up process. Once you have a buyer, it's pretty easy to say, like, okay, let's get your search, put aside. And I found, there's a little less proactivity, maybe, if that's fair, on a general agent than if it's a list. Is that fair?
I set them up on a search. Yeah, that's cool.
Is
I
that
set
fair?
them up on a search.
Right, because you're probably not going to get snaked by somebody else that might charge a less fee. On the buy side versus a list, it's like, that they want to take immediate action, and you're going to like, hey, did you have a chance to talk with your wife about that? Hey, did you have a chance to do this? Like, I'd love to, if you want to have coffee tomorrow morning, like, you're on it, right? When what's the buy side, I see, and again, not saying individualized that you guys do this, but as a whole, I see less proactivity, like, hey, I got that guy over to you. Did he ever follow up? It's like, I get that conversation like 3 times a week, right? Like, and now I think if you are looking at it like the only way to make sure I continue to get paid by that buyer is to follow up, you're going to be incentivized, and I'll use the word very specifically here, to have a nurturing program, to have a lead follow-up program. I mean, I could give you a screenshot of my Salesforce. A new lead comes in, Eric, is he married, is he not, is he a first-time home buyer, what's the date, and it's going to trigger a text, trigger an email, you know, like, I think that world that, you know, we are in right now is going to start to translate into your world considerably more than it has been before. So
Does anyone currently have like a CRM that does it automatically? I know some people use Total Expert, some people use Salesforce. There's all these different types. I know some brokers have that like proprietary, but you know, besides just putting someone on a search, you know, for, you know, 2-bed, condo, you know, zip codes or whatever it is, are you guys using like something outside of that to either drip thing?
They don't need us anymore. That's what I found.
Yeah, and on the buyer side, yeah, exactly, because you know, prior to, you know,
They know they don't need us, so they just go to Ripon, they sign up, they get automatic alerts like that. And like by the time Amrite or whatever sends the automatic email, they've already received it.
received it, yeah.
Yeah, but at least you're touching them, like
Yeah.
myself, and when everything searches, I look through it really quick and like, this is a possibility, so I reach out to them.
Yeah.
So I'm still reaching out to them at
Yep.
least 3-4 times a week.
Yep.
that's fantastic.
Yes, which is awesome because I'm just saying not everybody does maybe. So
I've been using Zenlist for a couple of years.
Yeah.
And I just like that because it has, I don't know if you use Zenlist a lot. You have to pay for it, but it's like a Redfin type thing. But it has an internal texting mechanism to it.
Yeah.
So I really like it because when the alerts go through, I get the alerts, my client gets the alerts just as quick as
Does it cost you $2,400 a year?
Say it's like under 400
Oh, a year?
a year.
I'm just
And then
Yeah.
end
it
of
has,
program.
Yeah.
it has internal texting though, so you can text your clients through there.
Yeah.
They will start texting you through.
I-
I get texts from my clients all the time.
I would say
I
you're
communicate
yeah.
significantly more with my buyer clients now than I ever did.
and I think like those that might not have something are going to need to create something.
I use Zenlist for everything now.
I mean,
Yeah.
But the best thing about
you
Zenlist,
connect with your
all
buyer
that I can text
much
with a
more
client right
easily.
now with them. But the best thing about Zenlist, which is a perk to going back to buyers, is that it includes PLN. And that's why I use
Nice.
it all the time too.
There you go.
Oh,
Yeah.
I did not know that.
That
It's
is
the only
added in
one.
your value
It's the
stack in
only one.
case if you didn't write that down, right? Right. Do you have access to the private? So
That's it, yeah, I didn't know that. That's it.
Because most of their they're mostly buyers agents.
yeah.
You should
Yeah,
if you're a buyer's agent, you should absolutely be using Zenlist.
Yep. So wrap up here, last 2 minutes, I promise. So like a buyer follow-up process, post-close client campaign, most of you would have some sort of, you know, after they close the transaction, what happens over the next 6 months, 12 months, 24 months. For me, I click a button in Salesforce and it goes for 2 years. It reminds me to do certain things, send a gift, call on a loan anniversary, do certain stuff. If you don't have that there, my point would be is that if that person, if you stay better in touch with that person, they're going to refer you a lot stronger to your next buyer than if you just randomly got them somewhere else.
you.
So
Do you get a thank you for the anniversary gift? Do you ever get a thank you?
50% of the time. Yeah, 50% of the time.
I feel like I get a
Yeah.
I feel like I get a text message or a picture of the card or whatever.
Yeah. The last few here is, hosting events. I think this isn't, new to anybody, but, kind of getting your events like locked down. I'm always going to do this. I'm going to do it on this date, the first Saturday of this, blah, blah, blah. This accounts pyramid, I'm going to kind of skip the last two because you guys kind of know when we're at the end of our time. But I love the accounts pyramid, which is, I don't know exactly what page,
14.
but page 14 of going through and looking over the last year where you got the most amount of leads from as a quote unquote like VIP, right? The A's, the B's, and the C's. And then each of those saying A's, I'm gonna buy them a nice birthday gift. I'm gonna have them on all of my everything, and I'm gonna try to see them twice a year for lunch, dinner, coffee, whatever it may be. A's, I'm gonna take the birthday gift out, but I'm still gonna market to them. I'm still gonna maybe do the handwritten card. I'm still going to do the drop buys. B's, I'm no longer going to do drop buys. I'm only going to do this. Basically, just signifies each of your marketing levels. And in my mind, like it's impactful when I do this because our businesses are changing to newer people that are giving you more business that maybe weren't before. And maybe it's someone you never even closed a transaction with that you met, you know, on the golf course, let's say, or, you know, wherever else, right? But you haven't bought or sold, you haven't done anything with them, but they've started to refer you, right? It's a great way to kind of reevaluate that here going into winter, going into next year. So.
Well, and I've had realtors joke about where they're like, yeah, when I, you know, I'm like, you know, do you stay in touch with your past clients? They've already worked with you, they know you, they like you, they trust you, etc. And it's like, well, just the ones that I like to talk with, you know, or just the ones that had a good experience, or just the ones that X, Y, and Z. And it's like they just keep calling kind of the same friends or the same people all the time. And it's like, man, you have all these other people that have already given you a lot of money and done a transaction and are happy with you. So we need to make sure you're tapping into them so they will be spreading that around.
That's kind of the end. The next thing, or the last thing that I'll kind of cover here is our probably next, probably after the holidays, I don't know when we'll get on the calendar, but our next one will likely be the kind of Google My Business page. So if you'd like to take the opportunity to really get focused in on Google My Business, on reviews, on building that out, there's, just to kind of wet the whistle, if you see on this page with all the pictures, this little image right here, so I own like 8 websites, and it's just search word optimization. So best mortgage Wilmette, this guy pays $8 a year for, right? But it will actually get people to search what's the best mortgage in Wilmette. Guess what website pops up? That one, which gets forwarded onto my other one, which gets forwarded onto my other, you know, it's just, you know, again, if buyers are potentially like unrepresented and they need to go try to find people rather than taking, you know, referral base, I think these back half of this book is going to be more and more important. So this will be our kind of next one of kind of building that out, sales funnel websites, things like that, of, you know, trying to like really get focused in on that. So
I mean, as far as when you were saying the Salesforce thing, we have some realtor groups we work with where their drip campaigns or their touch points is maybe not as developed as others. That's okay. There's, you know, there's you know, room for everybody. But we have people literally like, they're like, hey, Skaggs, Banks, can you, with our database, can you help add them into your drip campaigns? So we'll have obviously any close clients, but others where there's automatic, whether it's holidays, it's themes, it's whatever it is going out.
Co-marketed.
You know, exactly, co-branded, co-marketed.
So we'll actually do it through ours because we already have it built out and already paid for.
Yeah, so it's no cost to the realtor, but then, you know, the things they're already studying from their brokerage, and then to have a second voice, just a different email, a different look, a different whatever, kind of peppering them, you know, alternating whatever. We've heard good feedback about that, you know, just more people reaching out, more people engaging, etc. So again, that's something else that we can do. It doesn't cost anything, and it's for us it's automated, so it's very simple. But you know, it's you know, if you'd like, obviously.
Well, thank you guys. I appreciate your time. I appreciate your collaboration. Appreciate your